Today, very briefly, I'm going to get you guys updated with the short-term timeframes analysis. We have a BPRO applied for the baseline wave pivots. Okay, this is the very setting which stands for demand supply block visualizations. This basically bases the indications of the most important pivots in the market, as in the swings, the most important levels prior to the major swings, and it discounts and accounts of the most significant ones. Okay, so you see automatically adjusted levels to give you the scope and the picture for the most relevant price levels, price zones, areas to put the most attention towards. So we can clearly tell that there is some local, very thin and very short line, in the sand. The resistance is being folded, as in the first, decent candle that closed, in the prior weakness area here. We're talking about the middle one, prior to the actual spiky one, right? And the spike, the shooting star, if you will, this some people may there call it, some sort of like a gravestone doji, perhaps. The upper candle shadow is showing the short-term weakness, right, and short-term invalidation. So the range highs for the price action, were momentarily broken and failed to hold the new support. And as a result, a failure to maintain the support in this region usually results in a short-term sell-off and pull back or throw back towards the previous lower support areas, just like this one. So similar reasons, the most important rejection prior level rejected prior to the biggest swing that came after locally, considered resistant until the very breakout candle, okay, the thrust through this level, which technically right now is forming a rounded form of a top to some extent on the lower time frames. But more importantly, it's a technical attempt of the market to establish support in the previous weakness area, right? So depending on the result, if we manage to hold and build the base upon these regions, upon these levels, at around 38, higher upper $38,000 regions, we stand the chance of continuing the upwards pullback, the upwards recovery towards the $40,000 support, actually prior support and the actual resistance area, right? Other than this, a failure to maintain the balance and form a rounded saucer bottom, if you will, some form of like a cap and handle, whatever. A failure to define this level and acknowledge it as a support would potentially mean further downwards declines, at least into the lower $38,000 regions, which potentially just unfolds the chances and increases the chances of pulling back lower, throwing back lower the price of Bitcoin into the $37,000 region. So this could be a technical, classical, setup reversal, as in we break through the resistance, we fail to establish the support, and we pretty much retrace all the entire move up, okay, within another failure to maintain the breakout, right? Potentially another fake out on the bottom, and same way rally back towards the previous resistance area. This is what defines typical, range bound traps, the bull traps, bird traps, on the top and on the bottom. This is why this is pretty often and frequently met in the range bound movement sideways, lacking the momentum and the direction, right? So this is actually the most important chart